I do have a very different type of investment vehicle that I believe 99% of the people don't have.
All right.
And it's burial plots in cemeteries.
Okay.
Yeah, and there are a lot of upsides. Like there's no management fees. So once you buy it, you don't have to pay management. You don't have to pay any of those, but you don't collect dividends either. It's set by default to have an appreciation of 7 to 10%. And that's based on the company that runs the cemetery. That's how much they sell the plots for. And it increases 7 to 10% every single year. If you ever visit them, that's what they tell you, and that's what they do. And then I believe that's like a real estate play as well, because the land is limited. And I just buy like outside plots. So I don't buy like the stuff inside the building, like the urns and whatnot. It's definitely different. It's just another way of diversification.
Okay. So where did you dig up this investment?
I just noticed there's a huge arbitrage actually. Like these pieces of plots back 30 years ago was worth like, I don't know, a couple $100 to like 1,000. But if you go to the cemetery right now and ask the officer if you want a plot, they'll quote you, I think 50, 60,000.
Oh, wow.
Yeah, but you can find these unused plots on Craigslist from like people who don't plan to use it for under 10,000. So I think that's the arbitrage there. But then this is very, very illiquid. You have to find a buyer. But then once you find it, they say they see the 40,000 discount. They can easily just fork it out. But it's hard to find them. I never tried finding them. I just plan to start selling it maybe 20 years down the road.
Okay. Are you going to keep one for yourself?
Possibly. It has great views.
Well, I wouldn't care where I'm buried, whether by the fence or by the road, or like it doesn't, to me, it doesn't matter. And so do you buy them from Craigslist or do you buy them from the cemetery?
Not from the cemetery, because everything they sell is like 50, 60 grand. And there's no way I'm going to buy that.
Okay.
No.
Well, I mean, there's no property taxes or anything, no insurance. So I kind of equate this to an empty plot of land that you're waiting for the city to get to as it expands.
Pretty much.
It's the same kind of an idea.
Yes.
Except it's a more controlled environment, but also you don't know if you're going to be able to get a buyer, just really like for real estate.
Yeah, and there's no like running costs like property taxes or other things like that.
Okay. Yeah, there's no maintenance or anything like that paid on it?
No maintenance, no.
No, like they mow the lawn and stuff. I thought there might be some.
They charge you when you use it. You have to pay extra fees to dig things up and put someone in there. I think that's when they charge you for mowing the lawn, but there's no maintenance fees like before or after.
Okay.
Yeah, well, it's very interesting. It's different.
Absolutely. I mean, there's whatever people are willing to pay for, right? I mean, who would have thought that hockey cards or stamps or comic books, that's a common thing that people invest in, art.
Yeah.
So,
yeah.
Okay, well, that's a new one. How are you splitting your asset allocation, meaning real estate versus stock versus bonds versus other types of assets? For example, private equity.
Splitting asset allocation. I try to keep it 50-50, but it's never exact because I don't go measure like my real estate market price every now and then. My main active investments are from the stocks. So whatever I make there, I kind of have a waterfall strategy. So I branch out to other gold or Bitcoin and other things. So I try to maintain 50-50.
Do you do bonds at all?
Yes, I do bonds, but just recently because I just started a all-weather portfolio, and that requires some short-term, long-term bonds and some gold as well. I never had exposure in those, but it's good to diversify.
For myself, I did a quick look at my portfolio, a condo where I live, and the 3 investment properties add up to about 30% of my total net worth. Stocks and ETFs are about 36%. Mutual funds are about 28%. And then I have private equity, which is about 6% of my total net worth. I do very little in bonds. I actually don't own any mutual funds that have bonds directly. I do have some balanced funds, which are stocks and bonds, and I certainly don't have individual bonds or anything like that. So to me, it's been because of the interest rates being so low that if the interest rates go up, the bonds take a hit. So I've sort of not wanted to get into bonds. And I kind of let the professionals handle it in mutual funds. The private equity is there as a diversification. Private equity is just small companies that need investments. I've bought them in $10,000, $20,000 increments in various companies. And so far it's been okay, not great, certainly.
Do you have any exposure in gold?
Yeah, gold. I'm not a gold person.
Okay.
I don't see the intrinsic value. It really only has value that somebody else places upon it. You can't eat it. It doesn't pay you dividends. It doesn't have any utility really other than as jewelry. Like it can't make you stuff. Bitcoin, I'm sort of like that as well, except that it doesn't even have the history that gold. So what about you? What percentage do you think or any?
For all the miscellaneous, like gold and bonds and Bitcoins, there's probably less than 5%. So ultimately, it doesn't even matter.
I've heard advisors say everybody should have 5% of their portfolio in gold.
Yeah.
I think that's sort of more of a personal decision. Some people like it, some people don't. To me, it's a speculation, but other people see it as an alternative investment type. Bitcoin as well.
It is. It's kind of known that gold and Bitcoin shouldn't correlate with the market or the real estate. That's why people diversify into that class.
The real estate is a different animal in that because it's not liquid at all. When there's some sort of a panic, people can't sell it overnight or during the day. It takes 2 months to sell and so on. So it tends to be more stable. If it's rented, it has cash flow. So that is definitely different from gold or Bitcoin. Real estate has utility, at least. To me, it's interesting. I have friends who are either all stock and real estate is only to be lived in by them, or they don't trust mutual funds or stocks and they just like real estate. There's not that many people who kind of
dabbles in both sides, like ourselves.
Who dip their toes in both of the ponds. I think these are all very personal decisions, just what you feel comfortable with. If somebody forces you to get into something you're not comfortable with, the first problem that exists, you're going to pull out. So it's better not to anyways.
I think there's a point that you said some friends, they just consider their own primary resident as a real estate investment. You can't really look at it that way, I don't think, because if you sell it, you have to find a new place to live anyways. So unless you downgrade and then you get cash out. So it's not really investing in real estate when you're just buying it to live in yourself.
Yeah, that's an interesting philosophical discussion. You're right. Some people count their primary residence in their investment portfolio because it is an asset and it can go up and down in value. But then they say, I have no intention of selling it, so I'm not really going to count it. I mean, you count it in your net worth, obviously.
Yes.
But yeah, a friend of mine is looking for an investment property. I tell him, well, then you're going to have two houses. You're going to be really overweight in real estate. You should maybe get some more mutual funds with stocks or something like that. My house where I live doesn't count as an investment. So I've had those discussions, and you could argue that for hours and never really get anywhere. So you're fairly evenly split.
I try to be.
Yeah. Okay. And I'm kind of 30% real estate and 60%, let's say, liquid, and then 5 to 10% the private equity isn't very liquid at all. Yeah, just over the years, I think I mentioned this in part one. Over the years, as I was accumulating money, I never really accumulated enough to buy another house, another investment property. So it just kept going into stocks or mutual funds. So,
do you have any other types of investments like mutual funds, index ETFs, individual stocks, or other investments? I know you have like many individual stocks, right?
I'm about 40% in mutual funds and about 60% in individual stocks.
How many are there? Just approximate.
Yeah, way too many. I kind of let my portfolio get out of control. I built myself a mutual fund out of my
Pretty much
stocks. The experts say you're supposed to have 10 to 20 well-chosen, well-kept up-to-date stocks. Because once you get past 40, and I definitely have past 40, you're pretty much just mirroring the index.
Have you ever measured the performance against the index or against your other mutual funds?
I have. As far as my brokerage goes, I'm definitely outperforming a TSX, but that's not that high a bar. Let's face it.
But your investments are mostly Canadian companies, or they're all American, international, all everywhere?
They are mostly Canadian companies because I try to get dividend-paying companies. The Canadian stocks get pretty much no taxes on the dividends that they pay. You pay zero taxes up to about $50,000 of Canadian eligible dividends. So that's why I've been targeting Canadian companies that pay dividends. It hasn't worked out well in a total return scenario because a lot of them are energy companies, and they've just taken a beating. Yeah, they're paying the dividends still, but they went down in price. And so the net result isn't really positive other than having cash flow.
Right.
Recently, I started taking my U.S. rental checks, and instead of converting them to Canadian and buying Canadian stocks, I've branched out and I started buying American companies.
And are they also dividend-paying companies that you're targeting?
No, actually, again, keeping the taxes in mind, foreign dividends are taxed a salary, so they get taxed really hard. I've been aiming for companies that I'm expecting to grow in price.
Speculation plays.
Not speculation. I mean, we're talking Google and Microsoft kind of companies where if they pay a dividend, it's fine, and I'll grin and bear the taxes. But I'm expecting them to go up in price, so then I pay capital gains taxes, which are taxed preferentially. So I think my investing club has had some influence because they're into American stocks, and I can't bear the conversion back and forth because you always pay a penalty. And so now I'm taking American dollars and throwing them in. But so what about you? Canadian, US, other?
I made videos of this. I have I think 6 or 7 stock portfolios. Some are designated for Canadian dividend stocks. Some are for just growth stocks like yourself, some Google, Microsoft, Amazon, Apple, all those. It's all over the map, but I enjoy it. And sometimes if I don't want to think about it, I buy the index. So there's a VFV and with Vanguard that I buy a lot, which mirrors a S&P 500 index.